Hello everyone, welcome to the episode 2 of the Wyckoff mentorship class. All right, so on this episode, it's an official recording due to some technical issues we had in the community on Telegram. So I had to do a recording of the section and post it on YouTube so others could watch. On this episode, we'll be focusing more on accumulation. So I'm going to be giving you guys a breakdown on how the accumulation schematic works. And you can find the full introduction on Wyckoff with the PDF file, which is available right now on the Telegram channel. It's free, so you just have to use the link in the description and it will take you to the ebook. So you also get to understand what I am doing visually here while you read it off the ebook. So it's designed with breakdowns from the accumulation to the distribution to reaccumulation and overall the history of Wyckoff, where Wyckoff is coming from, who created Wyckoff, why it works, methods of which it can improve you in aspect of risk management, trading plan, and also how you can use Wyckoff in other strategies. So Wyckoff is also a price action pattern. So that means you can mix it up with whichever method you're using. You don't have to change your system of trading. You can use Wyckoff while you use SMC. You can use it while you use ICT method. It doesn't matter which of them. It's only a confluence which you can use with your own strategy to understand the market phases even more better. Okay, so on the episode 1, which is available on this same YouTube channel, is giving us an introduction to supply and demand. We talked also about premium and discounts, and also we looked into the laws governing Wyckoff. So on this episode, I'm going to be breaking down accumulation and how the accumulation schematic works and why it works and the phases which are found within the accumulation. So one of the files I'll be using to read will be the ebook. All right, so this is the chapter 4 of the ebook, which is available on the Telegram channel. On this chapter, I gave a breakdown on the meaning of Wyckoff accumulation and how you can actually use this accumulation pattern, how it was found, and the concepts behind it. All right, so it's more like every other accumulation method, which is known using price action from ICT to Wyckoff, they're all the same, right? It's talking about a phase in the market, which is basically a consolidation, which happens within a sideways movement. So price doesn't really move in a single direction like an uptrend or a downtrend. Instead, we're seeing price within a particular consolidation. So price is still determining which direction is going to be headed. So understanding that, we try to pick out the area of resistance and the area of support, right? So this helps us to understand what is happening within these areas. Now, these areas are basically the accumulation itself, because an accumulation is known for manipulating early buyers because the market is still bullish. But because it's an accumulation in Wyckoff method, you look for it mainly within the discount part of the range. Now, within the previous video, I taught you guys about premium and discount when it comes to supply and demand. The same concept applies also when you're looking for an entry. Now, because we look at the range from the high to the low, right? And with the concept of premium and discounts, we know this will be an equilibrium level. And if price is going to go bearish, price has to retest within the premium level of the range. So when we're looking for a distribution, we look for a distribution around this area because we're expecting price to go down. All right. So when we're looking for an accumulation, we look for an accumulation within, from the high, the low, equilibrium. We look for an accumulation from the discount level of the range. So for price to go higher. All right. So when you're looking for an accumulation, mainly it's supposed to be within discount of the range. So this is one of the key points. I do think I mentioned that also in the ebook, but if I didn't, then I guess you have it now. And this is one of the main factors to why the accumulations work, because if price is going to go up, they would have to build some kind of like a reason to why price will be going bullish. Adding to the fundamentals, we're going to be seeing some technical movements within the candlesticks. So those technical movements happen within certain areas of the range to keep the market structure at its uh, reasonable sense, all right? Because market structure happens with a certain concept, just like how you have the law of gravities and the law of, everything. Um, when it comes to market structure, it moves in highs and lows. So I believe we all know that. And when you understand these highs and lows, you get to understand the areas of which price give retracement to. Now, having the concept of premium and discounts from supply and demand, you can understand that within this first range, which this was the equilibrium level, the first reaction, which was from the automatic rally, happened from within premium. The first bullish pullback happened from within discount. If you pay attention to the second range as well, you will notice the same exact scenario played out. So you can see the pullback, the bearish pullback happened from premium of this range, while the bullish pullback happened from discount of this range. Although we had a spring, which is mainly a concept of manipulation, where price clears out the equal lows liquidity from the previous range to create a new low, and then before the official bullish rally starts to happen. But this is not applicable to all Wyckoff patterns, accumulation pattern, because on the accumulation too, we don't find such scenario. Instead, we have a retest from the previous range, the discount of the previous range, which price writes that to the upside. So as you can see, it is not a must that you must see a spring, but with the use of volume, which volume is a very, very important tool when it comes to trading Wyckoff, because it helps us to understand the intentions of the candlesticks and the momentum behind them. So when you apply the volume, which the concept was explained within the ebook, when you get the ebook, you can get more details into how that works. You can then identify when you find a spring and what a spring looks like. Although when we go to the chart, I would also show you how it looks like. It's more like the concept I've thought about on my YouTube channel on the FU candle, the institutional candle, the candle that does the manipulation and clears out, the lows, the stop hunt candle. So it's the same concept with the spring, just different method and different terms. But if you understand the FU candle, you understand that this is the same concept, where price goes below a support level to clear out early buyers before the official rally starts to happen. So coming to the phases of accumulation, understanding the concept within premium and discount, because why that is very important is that even when you have clearly identified the consolidation where you are spotting your accumulation, you can clearly see equilibrium was also marked. This is because we still have to keep in mind the concept of premium and discount of the range, so we can be able to identify the movements, right? So these words you see here all represent something, but before you could be able to pick out these words, you have to understand the laws governing the reasons to why they pick them, because these are traditional patterns which have been identified long ago, but the market has still been moving every single day. So you have to be fluent with how the concept works. So when you identify a pattern which doesn't look like a traditional pattern, you can be able to, back it up with logic and reasons. So with that aside, let me delete that. We move to the phases of Wyckoff. And now there are 5 phases in Wyckoff, and that's the same for distribution as well. Within these 5 phases, we have the phase A, which I talked about also over here. If you've been reading what was on the screen, you probably know what that is already. So there's a breakdown for phase A, B, C to D and E. It's all available in the ebook, so you can take your time to read through that and get to understand them more. So I'll just give a brief summary of them, and then I expect you to go, do your own studies. Now, when it comes to phase A, this is more of the end of the previous, downtrend, because I told you this is happening within discount. So obviously, price will be riding the trend from the upside to the down. Okay, so this marks the beginning of the end of this downtrend. Okay, so the market starts to create more like the beginning of the consolidation area. So we start to see more of a support and resistance, bullish and bearish correction patterns happening. So okay, so um with the end of the downtrend coming, we start to see some kind of support and resistance level forming up. All right, so the market is still uncertain to determine if this is an accumulation. So we can't tell from the phase A if this is actually an accumulation forming up, but this is kind of like the first phase. So from the second phase, which is the phase B, is where we see more of the manipulation and reactions from the price action, which gives us much details to what is happening and why this is an accumulation. So, all right. So on phase B, we have more of the confirmation of the support and resistance level. On this phase, we don't see price moving into any direction. We just see more of a sideways movement. Okay, so you see lower time frame patterns giving structures which are more likely to look like price is bearish, but there's no momentum to follow up with the bearish trend. So there's kind of like, this is like the phase where you see the momentum shifting from bearish to bullish. So as you can see, if there was a crossover, the turning point would be at phase B. So within phase B, we see price ranging from support to resistance, from resistance to support. There's no particular direction being booked. But at the same time, the institutions are also building up liquidity and also liquidating early buyers and sellers from both sides. So the phase B aspect of the market of the accumulation is the point where you do more of the observation. You're not supposed to be trading at that time. You're supposed to be observing where we find the first breakout. Most of the time we see more like a stop hunt of the official highs, of the resistance level, which gives us little confirmations to signs of strength, which is the SOS. So in some patterns which I have tested myself, from my own trading, you kind of like see some signs of strength from this angle. It's more safer that way, because as you can see from this point, the structure still looks bearish, right? So you can't determine anything yet. And coming with a spring, that's still also a bearish sign. So most of the times, if price is super bullish, you kind of like see a manipulation above this high, but price still closes below, to just give a weak sign that the price is kind of like bullish. So that happens in rare occasions as well. So you can take that in mind. And then we have phase C, where the big manipulations comes in. So when price is kind of like accumulating, the accumulation is done mostly on the bearish side, because so it's an accumulation because they accumulate traders, and then they manipulate them to go the wrong directions, and then they lose their money. So the concept is to give you an insight to what's going on within price action and with fundamentals, for you to know how to put two and two together, and know what to do with your money. So the concept of the spring is also the same concept with the FU candle, which there's a video on FU candle on the channel. You can go look for that and study that more. But on this aspect, we see manipulations of price clearing out previous lows, which respected the support level. Now, this spring on candlesticks also appear in form of a bullish rejection, kind of something like this. Okay, so it happens in form of like a bullish rejection, and then it happens very fast. you're using volumes, you can see the momentum within the market at the same time with the candlesticks reactions telling you that this is actually manipulation happening and not a bearish trend. So it happens very fast, and price still gives that bullish intentions that shows that market is bullish after such bearish moves. Okay, so after that we have the retest that tests the support level from which the manipulation happened, and then gives an early opportunity for traders to join in. Now, if you are experienced with Wyckoff, you can easily get an entry from this point. But if you're not experienced, I advise you wait for a breakout. As you can see, if you pay attention to this point, if you're losing the lower time frame structure, you would notice that from this downtrend, the first official breakout happened from this point using market structure. So the first test, last point of supply zone, which was tested in the new range, would be this area. All right. So testing this area is also another good point where traders could get an entry from. And this is also a good point where traders to get an entry from. But from the phase D and E, this is the phases where the true bullish rally starts to happen. So as you can see from phase A, you see the bearish movements. Within phase B, you see the accumulation. Within phase C, you see the manipulation. And phase D and E, the markup starts and price starts to move to the next direction. So when market is coming down from a bullish trend and trying to go to from a bearish trend and going to a bullish trend, you see more of an accumulation because traders have to be liquidated because liquidity moves the market. So multiple liquidations happened at this point. This is why it's called an accumulation, because it's accumulating traders and also clearing them out, which is making more liquidity to move the market. All right, so multiple times traders were liquidated, and market still moves in a direction where traders could have luckily gotten a clean entry from. And if you pay attention to this, you will notice most of the liquidations happen in phase A and phase B. So if you're trying to use Wyckoff or you plan to use Wyckoff, I would advise you wait for a proper confirmation from the spring and the test area to confirm that the liquidations have ended. So you don't end up getting trapped at any of these points because it's more of a scalper's zone. So if you want to be trading this area of interest, you have to be a quick scalper and you want to go in and out as fast as possible to wait for price to give the main direction, because at this point, there's no major trend. The only trend we have is sideways. There's only sideways movement, no bullish movement, no bearish movement, just pure sideways. So that is a breakdown of the phases in the Wyckoff accumulation. And you can find more of that breakdown within the ebook. And then we have the markup following the accumulation that gives the breakdown of how the bullish movement works. Right, so there are also practical examples of this, which were also documented. You can see them here. And most of these informations are already simplified within the ebook. So you don't have to wait for full recordings to happen. From the episode 3, 4, 5, I would start doing more of analysis on Wyckoff. That's on charts, so people can get more practical examples. So the episode 1, 2, and 3 are mainly focused on how to use the accumulation and distribution and the history of Wyckoff. Although all these are also available, from the history to how to use accumulation, they are all available within the ebook. Okay, so moving over to the charts. All right, so this is GBP USD, and we have a clean price action which we could use for our case study. And using this, you can clearly see, you can draw from here or you can draw from here. All I'm doing is trying to identify the support and resistance level of which the consolidation was being done. As you can see, the multiple retest in aligning with the equilibrium level also gives an extra confirmation that this is actually an accumulation pattern. As you can see, price did a retest of the last point of supply instead. So as you can see, it is possible for you to get something like this instead of a spring. So you have to keep an eye out. All right. So it doesn't matter which one you get, you just have to know what you're doing and why you're doing it for it to work. So I'm going to be breaking this down. So this is the selling climax. AR testing of a resistance level, which also this marks the phase A. If I'm not mistaken. Let me see if I could get the diagram on the screen. All right, so we got the diagram. So we, as you can see, this is the phase A. We can also identify this as a secondary test, but I won't be doing that. There's no need for that. This is also a secondary test, which is this. I told you on chart, it doesn't have to be exactly the diagram which is being drawn, but the pattern has to be seen. The concept, the laws has to be met. As you can see, it looks a lot familiar to it, but it's not going to look exactly like what is being drawn on the picture. Okay, so phase 2 happened here. This is on SC. Okay, so here is that sign of strength I was telling you guys about, the SOS that happens rarely, but it does happen. That's what we have here. It wasn't identified, but that's what we had here. So it's a sign of strength because price goes above this, which is also breaking, kind of like breaking the support level, which was created here. But this is like an SOS sign that gives you a confirmation that price is kind of going bullish. Okay, so we had this, and then we had this playing out here. Okay, so some guys use the volume, to give them more insights to how Wyckoff works. But for me, I don't really use that because I use Wyckoff on the higher time frame, like I said on the previous episode. So I don't use this for entry confirmation because if I was to use this, if I was looking for an entry, I would easily just use market structure. From this point, I've gotten a clear understanding of what's happening because this is a change of character. And then, we have the last point of supply, which is also a retest point from here. I could have easily got an entry from this point with my SL below this. And then, to ride the price up. So the Wyckoff is not really that complex if you know how to identify them and then use them on the chart. All right, so I would advise you go use the ebook. So you go with the ebook so you could get more insights on how this works. And then you try to spot them on charts. Then you can start doing live charts to see if you can, predict them before they happen. Because I could show you more of this from previous charts which has happened before, but it's not going to cover up that which you can do yourself if you end up knowing how to use these things. So, and there's also another secret you need to understand. Accumulations happen on different scales. On the ebook, I talked about the law of cause and effect on Wyckoff. As you can see, this is also an accumulation, but it's happening on a smaller time frame, or you can say a smaller scale. And on this scale, we had a spring, and then we also had a test with a little mark up. So as you can see, the law of cause and effect comes in with kind of like when you see a smaller accumulation, you expect a smaller result. When you see a bigger accumulation, you expect a bigger result. So these are all accumulations happening here. And this manipulation we see at this point here gives us an example of a reaccumulation happening just at this point. So we have an accumulation, a smaller accumulation happening inside a bigger one. And then on this one, we see the spring, but on this one, we see the phase 2. So this is also another complex system when it comes to Wyckoff, because as you can see, the last point of supply, which was tested both schematics. So you have to know how to use these patterns to be able to know how to identify them, because it doesn't get fixed to one time frame. You can find this appearing on multiple time frames. You can find them appearing 3 times in a spot. It's all extra confirmation. You just have to be able to understand what market structure is doing and get the insights from what this trend are trying to say. So as you can see, there was a shift in market structure from here, a clean shift. But if you are lost from what the accumulation was doing from this point, you start getting confused, and you start trying to understand what was going on and why, things was not working out. So the accumulation, distribution, and the whole concept of Wyckoff is to help you give you more insights to what's happening within price action. Right? It's not there to change your concept or your method of trading. It's just there to help you understand more what is happening within market structure and what the candlesticks and institutions are actually doing. Okay, so this is for episode 2. On episode 3, we'll be doing more of live analysis with the team. So I'll be showing them how I use Wyckoff, and I'll also be showing them how the distribution works. So you can join us on episode 3 to get more live examples of how Wyckoff works. And then you can get the ebook, which is also in the description. You can get smaller videos on how Wyckoff works on our Instagram page, which all the links are also in the description. Leave a subscribe if you are a trader and you want to join the academy to get more knowledge on Forex trading and how to trade the market. You can join us at JayFx House. Thank you.